Welcome back to my channel. It's Saturday, November 21st, 2020. Today I'll be discussing my two major holdings in my financial planning journey, financial investment journey. I'm currently invested in the Vanguard VTI, which is the total U.S. stock market. This ETF or fund has every stock that's in the U.S. stock market right now as of today, which is 3,590 stocks. So it has the large cap companies, the Apples, the Amazons. It's got the mid cap companies. It's got the new micro cap companies. So every stock that's invested in the U.S. stock market right now is in this fund. So in my opinion, this is probably the safest investment you can do in any stock, in any investment in the stock market, because it has every single fund that's in the U.S. stock market. The only way you would lose your money in this particular fund is if every single company in the U.S. stock market will still go bankrupt and collapse the next day or in the next few weeks or few months. So the chances of that happening are slim and none, because if every single company goes bankrupt in the U.S. stock market, then pretty much everyone on the planet is out of a job. So the chances of that happening are very slim. You can pick stocks which are highly risky and highly volatile. A stock can be up today making great earnings, and for some small hiccup that goes on with that company or something, that company goes bankrupt, or everyone sells off all their shares and you lose all your money. But when you invest in an index or an ETF, you're not going to lose. You may lose, may go down a few days or a few weeks, or even you may even go down for a whole year. But unless every single company in that ETF or that index fund goes bankrupt, you're still in the game. You're not going to go bankrupt. So it's less stress. These kind of investments, you invest your money in spare change. If you want to retire early, put your money in here, and each month you just put some money in your account. Each week, if you the best way to do it, they call it dollar cost averaging, where each week when you get paid or whenever you get paid, you set up your account to your brokerage account and have your money transferred from your personal bank account to your brokerage account. And that way you just automate it and you forget about it and live your life. In 10, 20 years from now, you're sitting on a gold mine. If you don't invest for your future now, and you wait till you're older in life, then and I'm not gonna say it's too late, but then you're not gonna have the quality of life that you want, because we're all getting older. Healthcare, depending on where you live in the world, I live in Canada, so healthcare is free in Canada. We're covered in Canada when it comes to healthcare. But if you live in the USA or you live in other parts of the world, if you don't have universal healthcare, you're going to be paying for that healthcare as you get older. When you're young, when you're young and in good shape, you don't worry about it. You don't think about it, because you're not having to go to the hospital. But when you get up in age, if you're fortunate enough to be in your 80s, 70s, 80s, 90s, 100, you're going to be going to the hospital for procedures, physicals, checkups. All that's going to cost money. All that's going to be cash money you're going to pay. So if nothing else, you just invest right now just for your medical expenses, because you never know what the future holds. So let's break it down. We're doing we're going to go through my breakdown of my VTI, Vanguard VTI total U.S. stock market. To buy one share as of today, as of yesterday, which would be on Friday, November 20th, one share would have cost you $183.21 US. All figures are in US dollars. The risk potential of this fund is 4 out of 5. So it's a risky fund, but it gives you good returns. Now, when they say risky, it's risky according to their stats and their numbers, but really it's not that risky. 5 is risky, but you have some funds who are 4 under 5 or even 3, and so you can lose your money overnight. The U.S. stock market has never collapsed to zero yet. In hundreds of years, it's been in play. So, even though it says 4 as a potential risk, I'm not bothered by that, because I know it isn't that risky. Now, scrolling down here, if you had invested $10,000 in 2010, 10 years ago, today, 10 years later, 2020, your $10,000 would have grown to almost $40,000 in 10 years. So if you had $20,000, that would be $80,000. So four times whatever you put in your stock fund 10 years ago, you would have today. If you're lucky enough to have 100 grand portfolio, the $100,000 is now almost $400,000. So you see how that works. Now this fund says after 1 year return on this total U.S. stock market, that the U.S. stock market has returned 14% interest on whatever you had invested a year ago. Going back 3 years, it's gone up 11% and change. 5 years ago, it's gone up 13%. So it's gotten better in the long run. After 10 years invested in this U.S. stock market, your return is 13%. And since inception, since 2001, when this VTI was first came into play, it brings you back almost 8%. So, unless you're I don't see any bank anywhere paying you 10%, 13% to invest your money into their institution. Yet they charge you fees. You have $2 in your bank account, they're charging you fees each month. And if you don't have the money to cover the fees, they put your account into negative. And it just keeps negative. They don't care how negative it goes. Just keep charging you even if you never use the account. So the best thing you can do for you and your family is starting to invest in the stock market. Because you see, even like right now, we're going through a pandemic right now. People are losing their jobs left, right, and center. In the US, they're losing hundreds of thousands of jobs each week over there. Pretty soon they're going to run out of jobs. But yet the stock market's still going up. This year they're going almost 30,000 points. That's almost a record for the U.S. stock market. Now, how can that be? You got a pandemic going on. People are losing their jobs left, right, and center. People are losing their homes, they're in debt. They're behind on their mortgage. They're behind on their credit cards. But yet the stock market's still going up. So you can't go wrong. So if you're fortunate to have a job now or have some money stashed away, the best thing you can do is invest in the stock market, because the people who run the stock market, these big companies and conglomerates, they're never gonna allow the stock market to crash. So they're always gonna be putting out you see all these companies going out of business. These restaurants, sure, these restaurants will go out of business, but you'll have a larger chain of restaurants who will come in and buy up that property, buy up that restaurant, and take it over. So even though these small companies who can't afford to pay their bills right now, the big companies are getting bailouts from the government. They don't have to worry about their business. Their business is going to be around after all this is all over. The only guys who are going to suffer are the mom and pop guys, the guys took out a mortgage or invested their whole life savings to open a restaurant or a business. But meanwhile, you have these multi-billionaires still making billions of dollars during the pandemic, sitting back and waiting for all these these properties go into foreclosure, these businesses go into foreclosure, and they just swoop in, buy everything up at a discounted price, and boom, the economy goes on. The people who lost their life savings and their properties and all these businesses, they'll be forgotten about. Life moves on. That's how it is. So that's why I'm getting involved in the stock market. That's why I'm investing for my future, my family's future, my grandkids' future. Because somebody has to start somewhere. You look at all these multi-billionaires or millionaires around the world, somebody in that family started something years back or recently for the families and for their families and for the future generations to be ahead of the pack. So there always has to be somebody who starts and plans for the future. And I guess that's me in my family. So let's breaking out a portfolio for the VTI. In this fund, they've got consumer discretionary. That's at 16% of the fund. So in this fund, the highest percentage is in the technology, which is at 26.5%. That's your Amazons, your Facebooks, your Microsofts. So they realize that the most money to be made in the industry, in the stock market, in life, is technology, because every technology is the one thing that what I'm looking for, affects everybody. Your phones, your cars, your homes, it's all technology. It's all people thinking of things to make our lives a lot easier. So when you invest in technology, you can't go wrong. You look at the big companies right now, that Teslas, the Microsoft, the Apple, even Amazon is considered a tech company. These are all companies that are in tech. And these are the richest companies right now in the world are the tech companies. But it also has consumer staples. I guess stuff you everyday stuff like soap and fabric softeners, toothpaste, stuff like that. They got in that fund. They got 5%. You got energy, electricity, solar power, 2%. Financials, the banking system, anything to do with money in this fund is 10% of the total stock holdings. Healthcare is 14% of the total holdings in this fund. Industrials, that's big business, companies, factories, they're in at 13%. As I said before, technology is the biggest portion of this fund, which is at 26.5%. Telecommunications is 3.4%. Utilities, which is I guess that's your electricity and stuff like that, that's at 3%. Now, if you look at it in this fund, they take out the top 10 funds. The top 10 companies in this fund is Apple, number 1, Microsoft, Amazon, Google, Facebook, Berkshire Hathaway, Johnson & Johnson, Procter & Gamble, Visa, Nvidia. Those are the top 10 holdings, top 10 percentage. Those 10 holdings in this whole fund out of 3,590 stocks. Those 10 funds, companies hold 23% of the total 100% of your fund. Because they know these 10 companies are always going to make a profit, they're always going to be in business, and they're always going to innovate and move forward. So they're always going to be around, or at least for the foreseeable future anyways. Tesla is not in there right now, but there was a news last week that Tesla is going to be in now in the S&P 500, which is the top 500 companies in the USA. Tesla is the first EVO company to be put in there now, but they say because it's so big now, such a big company, they may have to split it into two companies and insert it in there. So that's good to see. Now this fund here, the fee for this fund is 0.03 cents for every $10,000. For 0.03% for every $10,000. So if you invested $10,000, you pay about $30 a year on $10,000. That's almost nothing. Your bank will charge you $15 per month, even if you get nothing in your account. So, in my opinion, that's almost free. So, that's all I have right now for today. My next video will be talking about the total international stock market, excluding the USA. So that fund that I also invest in is an ETF that has the total international stock market except the US. You have Canada and the rest of the world. So even though it says every company in the world except US, you still have companies that are invested there that are US companies that are based outside of the USA, in Europe, in China. So even though you're not directly invested in the US right now, in the future fund that I'll be talking about in the next video, you're still invested in the US stock market. So you're getting like residual. So that's it for now. Everyone stay healthy, take care, and